Hey everybody, welcome back. This is just a quick video. I'm gonna go over some of the indicators that I use on my charts because a few people have asked me about all the different things that I have on my screen. A lot of these are custom indicators that I coded myself. So let me just, I have this all on a monitor over here, so let me just go through this. I'm hoping you can see my mouse. Um, a few of the major things here is obviously I've got the volume weighted average price. This is the Tesla chart of today. This is the 22nd of May, 2026. And then I've also got this here, either the green line below or the red line above. And this is the 70 period moving average, but it displays it 1.8 ATR below the actual line, so that it's always below the price action or above the price action. And it's just to remind me of what direction the trend is, to only take long positions when I've got a green line and so on. Um, and as well, you'll notice that it gets thicker in these areas here. So here it's thicker, and then here as well, it gets a thicker line. And then it's actually also thicker right here in a couple of places and also up here. So what is that? Well, that's when the ADX, which is down here along the bottom, I'm a big fan of the ADX. So when the ADX gets down below 16, so you'll see that right here where my mouse is. I hope my video is not covering this, but you'll see that it's below 16, and that means that the price is really coiled up. And usually when the ADX is down below 16, it means that this thing is ready to move. So the stock market goes from contraction to expansion, right? So I want to look for stocks, and this is really the main indicator that I look during the day is for the stocks that I trade, which is 10 or 11 stocks. I have a watch list on my screen, which always sorts those names by their 1 minute ADX. So what's the ADX on the 1 minute chart? And the ones that have the lowest number, so it could be down as low as 6 or 7 or 8. And if in those cases, those stocks are really coiled up and they're ready to move. And so those are the situations. For me, whenever it's below 16, there is a trade on that stock. And it's my job to look at the chart and figure out whether or not that move is likely to be bullish or bearish. That's my number one responsibility. So the names, I've already picked the names that I trade. So that's no longer, I don't have to worry about that during the day. I also have my identification system, which is the ADX, which tells me which stocks I should be looking to trade at any point during the trading day. And then my job is to look at the chart and decide whether it's bullish or bearish. So this here is, this is very, very common. I see this all the time in all kinds of different names that generally about a half hour into the trading day, quite often it's right around 7 o'clock. I'm on the West Coast, by the way, so 7 o'clock is 10 o'clock on the East Coast time. So between 6:45 and 7 o'clock my time, that's usually when stocks are coiled up in the morning and ready to begin their move either up or down. So this is a very clear sign. And honestly, I should have taken this trade. I wasn't in this trade because I got into an Amazon trade, which I never should have taken that trade. And it was at a loss immediately. So I was 100% focused on my Amazon trade. And I saw this Tesla chart and I thought, oh my gosh, this is a beautiful chart. And I didn't take the trade and I really missed out. This is probably the best trade of the day and I missed it. So, but anyway, so you'll see that this is what I look for. So, and this is the 70 period moving average. So I just did this ADX indicator. I just modified it so that it gets thicker when the ADX is coiled up like that. So it was coiled up here. It was coiled up here. And this is a clear short trade where you've got an impulsive move down. And then this is a bear flag. And then there's an extension move. So and I actually was tempted to take this trade. I didn't take it because the whole chart is so bullish that I was like, man, it's crazy for me to take a short trade when the chart is so bullish. But this is a very clear bear flag pattern, coiled up, ready to go. I took two other trades today that were identical to this, and they both worked out. These quite often work out well. So I could have taken this one and I didn't. And then during the middle part of the day, this is like during the lunch hour of the stock market on the East Coast, really choppy, hard to trade. I mean, here it was coiled up. Down here, you'll see the ADX was quite low. And so this would have been a bullish setup. But again, I mean, it's tricky. It had a big fake out here. So if you took the trade early, you probably would have gotten stopped out. If you took the trade here, then you would have done just fine, but you only had 2 or 3 minutes to take that trade before the move started. And it's always hard to take the trade after the move's already started. As well here, it wasn't coiled up per se, but this is a very classic bullish pattern. The way it's coming down at a low angle, it's not steep. This kind of a low angle descent, generally matching the beginning of. So this was an impulsive move here. And then this is a gradual decline back down to the beginning of that move. That's a very bullish pattern. So this is another trade. But in any case, I'm getting off topic. I apologize. So that's what the green line and red line is. So you'll also see these horizontal lines. So this gray line here is the close. And if you actually scroll down, you'll see that the open is also there down below. This is the low of yesterday. This is the high of yesterday. This yellow line is the pivot, which is a very common in technical analysis. That's the pivot. And then as well, I've got this is R1. This is daily R1. This is resistance 1. It's a calculation. And I also have below the low of yesterday down here, this is S1, support 1. So there's calculations for S1 and R1, which come out every single day. So I just have it so that it charts that. And then as well, these green dots and red dots. So the green dots, look for times when this is an 8-period EMA, but is calculated by open high low close divided by 4. Which smooths it out. So I don't like doing it when it's such a short, if you're doing a 50-period EMA or a 200-period EMA or whatever, even 20, you can do it by the close. It's no problem. But if you're doing an 8-period EMA, you want to have it so that it doesn't calculate on the close of each candle. It calculates on the open, high, low, close divided by 4. And that really smooths out the line. That's actually how Heikin-Ashi candles are created, is with that same calculation to smooth out the line. So it does a nice job of smoothing out the line for me. I have that on here. But the green dots display when that line is going up and the close of the candle is above another line, which is a line that I created myself. It's the division between the variable moving average and the Ichimoku Kijun line or whatever, those two divided by 2. This is a complicated thing, but I call it the magic line. I mean, if you're above that line, it's bullish. If you're below that line, it's bearish. I don't have it displayed because you don't need to see it, but the dots, the green dots and the red dots show the candles. And so basically, if you're just trading long, if you're long every time the green dots appear, you're going to be on the right side of the market. I mean, it just follows these candles incredibly well. So that's something to look out for as well. You'll see there's slightly different colors, either light green or dark green. That depends on whether or not the ADX is rising or falling. So if the ADX is rising, that means the trend is strengthening. If it's falling, that means the trend is either slowing down or the stock is going to a consolidation period. So and so you'll see here, these are all red candles. That means this trend is strengthening. But then here, for example, this down move starts with a yellow dot, and then it's red, and then a few yellows. That means that the trend is not necessarily strengthening anymore. And these, they are effectively the red dots, but they're yellow because the ADX is trending down, not up. So, and again, you see that either with the green dots, light green or dark green, and then the red dots, it's either red or I think this is actually an orange color. You'll also see a few white dots. Well, so these white dots right here, here's a white dot, here's a white dot, here's a white dot, here's a white dot. These are all fair value gaps. So it calculates if the low of this candle is higher than the high of this candle, then it puts a dot halfway in between, the halfway mark between the low of this candle and the high of that candle. Same thing here, low of this candle, high of that candle. This white dot is in the middle. And it's amazing how many times the market will come back and get these dots. it's just standard fair value gap trading. The market likes to come back and test fair value gaps. It generally goes to the midpoint of the fair value gap. So that's precisely what these dots are. And particularly in consolidation periods, if a white dot shows up, the market will not let that go. Like it will go back and get it. Here's one right over here, right? You've got a white dot right here. The market, sure enough, came back and got that dot. Then here on the way down, you've got a dot here, you've got a dot here, a dot here. It immediately filled this one, okay? Then here's a white dot, and it came back down and got it right there. And then it went up and got this dot. It didn't quite get that one, but here this candle went up and got that one. So these white dots, especially in consolidation periods, they get touched. So if you see a white dot and you're in a consolidation period, you know it's going to come back up and get that dot. Like here, when it's flushing down, you've got a white dot there. This is going to come back and get it, right? One way or another, it's going to come back and get it. Now, sometimes it doesn't do it right away. Like this one here, there's a dot because this is an impulsive move up here. So you've got a fair value gap here and a second one up here. So it did take a few minutes. Here's actually a third one. But then sure enough, it did come back and get those dots. So fair value gaps is a real thing, and it's something worth looking at, and that's why I have it on my charts. You'll also see some purple dots, and these are wick candles, where the wick of the candle is larger than 0.5 ATR of the candle. Now that's ATR of whatever chart. Like if it's 1 minute chart, it's the ATR of a 1 minute candle, right? So this here, this candle right here, this wick on the top is larger than 0.5 ATR of the 1 minute candle, and the candle has to close in the bottom 25% of the total range. So if those two things are correct, then it puts a dot on top of it. It also has to be the highest high of the last, I think, 8 bars. And then down here on the bottom, you'll see there's a wick and a close near the top. This didn't play out for a bullish move, but I still like knowing that these wicks are there, and this just highlights those for me. Here's another wick here that closed near the top of the range, and that one did begin a move. So they some do, some don't. It's not guaranteed. Nothing in the stock market is guaranteed. Here, this one was a short-term top. It came down, and then sure enough, it came back up. Quite often when you see these wicks, if they do represent a top, they'll quite often come up later and test that top and just exceed it by a hair and then reverse. And that's exactly what happened in this case. So it doesn't always happen, but many times you'll see that. So if you're in a move and you get this candle, it's quite often safe to hold on to the position and wait for 10, 15 minutes, and it'll come back up and wick through that, and you can get out right here. And that would have been basically the high of the move. Okay. So what else? I've got a moving average here. This is, I think it's a 360 period, something like that. It's roughly 1 day's worth of price action. So it's very short term. But I think that's all. The one more thing here, this yellow arrow, this shows up on my charts every time. For the first time in the day, this stock makes a new high over yesterday's high, because quite often that's a liquidity sweep, and it'll wick above the line. It'll come straight back down afterwards. And that's actually exactly what happened here. So it went up, made a slightly new high, just a hair, and immediately got rejected with a wick candle. Both of those indicators happened at the same time. And then sure enough, it came all the way back down. So this is the first time in the day that it makes either a higher high or a lower low. You're going to see these yellow arrows. And finally, these big white dots here that you see, these are the largest dots that I can program. You'll see them as well here. This is the largest volume of the past 100 bars. So on the 1 minute chart, that's about an hour and a half, right? Roughly an hour and 40 minutes is a 100 bars, 100 minutes. So if you have the largest volume of the last hour and a half, it's going to print one of these dots. And you'll see on yesterday, there was some dots. There was all of a sudden, there was a big breakout midday. And sure enough, see these dots show up because this is very heavy volume that made this all of a sudden this breakout. Now that ended up getting reversed, but again, I like knowing when these things are taking place. Okay, thank you so much for watching. If you have any questions, put them in the comments below, and I'll do my best to get them answered for you. Thank you. Bye-bye.